watching Finance with Pradeep on HyBiz. And here we are sitting with Pradeep sir, who has 14 years of experience in the field of finance and investment. Sir has also founded Fortune Academy along with his wife, Dr. Mani Pavitra. Sir, I would first like to start with to know about Fortune Academy, what it is, and how do you teach and mentor others to invest in the US market?
Absolutely. Firstly, thank you, Sujata, for introducing me. My name is Pradeep. I've been, like Sujata said, I've been an investor for the last 15 years, invested in multiple asset classes. Me and my wife, Dr. Mani Pavitra, we run Fortune Academy. It's an online training academy where we teach students on how you can get started on your US stock investing journey sitting in India. So how an Indian citizen can get started, that is what we're going to teach them. And we have multiple courses, seminars that students attend where they're going to learn everything from the basics to becoming an experienced investor.
Right. So on today's episode, I would like to know from sir that as a common person, apart from my paycheck, what are the various other sources of earning that I can have, keeping in mind my future, my present? How can I earn other than my paycheck, my job?
Many people ask this question, right? So I'm a salaried person, I'm getting a monthly salary, or I'm a business owner, I'm making certain amount of profits per month. But how do I really start getting an alternate source of income? Because this is what Warren Buffett says. If you're not making money while you're sleeping, you're going to continue to work for the rest of your life. And friends, that is precisely what we teach at Fortune Academy as well. How you can start investing your hard-earned money and how to start making your money work for you. When it comes to investing, in order to answer this question, I have to start by giving you the right context with explaining to you what is an investment vehicle. Basically, there are multiple ways in which people, when they are investing their money, they are doing it in the anticipation of expecting or the expectation of their wealth growing. And there are multiple ways in which they expect it to grow, right? It could be by investing in real estate. It could be by investing in stocks. They could probably be investing in mutual funds or the US stock markets or any other international trading opportunities. But primarily, I would classify the investment vehicles for individuals into two major categories. The first type of investment vehicles are called direct investment vehicles. That means whatever vehicle that you are choosing in order to grow your money is a direct investment. A few examples I can give for that. One major example is stocks. So when you are buying a share or a stock, you are essentially buying part ownership in a company, right? It could be a company like Maruti Suzuki, it could be HDFC. There are 11 sectors in the world stock market. So you might choose any company from any particular sector. But when you are buying a share of a company, essentially you are becoming a part owner in that company, right? So that means the rupee or the dollar that you're investing is basically giving you the ownership of the company. This is an example of direct investment vehicle. Eventually, if the company starts making more profits, if the share price of the company goes up, naturally as a shareholder, the value of your money will also go up. So now that we have an understanding of the direct investment vehicles, it could be either stocks, it could be investing in real estate. There's also another kind of investment vehicle called indirect investment vehicles. Essentially, when you are investing in an indirect investment vehicle, you are not directly putting your money into that asset class. You are giving that money to a third party, which in turn is investing that money on your behalf. So a few examples. One major example I can give you for an indirect investment is a mutual fund. So what is a mutual fund? How can we invest in mutual funds? Many investors have this question. So a mutual fund basically is floated by an asset management company. An asset management company is a professional company run by professional money managers. Each mutual fund, each asset management company has a different objective. For some, the objective could be wealth creation. For some, the objective could be just creating monthly income. So based on the objective, the mutual fund house will pool money from different investors. Maybe there could be investors sitting in Hyderabad, there could be someone sitting in Bangalore. So people across India or people across the world are pooling money into the mutual fund house. Let us say the mutual fund house has collected a fund of 1000 crores or 1500 crores. Now the money manager who has been appointed by the mutual fund house will decide where to allocate this money.
Right.
Should he allocate it to buy stocks? Should he allocate it to buy bonds? Should he invest in government securities? All of these, the mutual fund manager, based on the objectives of the mutual fund. Is it wealth creation? Is it monthly income? Is it preservation of wealth? Based on all these objectives, he will decide how much of this fund to allocate to what. And for this purpose of doing this, they are going to charge you a limited amount of fees. So these are the two major types of investment vehicles that people can use to get started on their investing journey. One is a direct investment vehicle, whether it is a stock, whether it is real estate, or it could be indirect investment vehicles like mutual funds.
So viewers, after seeing the episode, if you have any questions regarding finance, investment, mutual funds, stocks, real estate, you can always ask Pradeep sir. What you have to do is follow HyBiz and write down your questions or comments in the comment section of our channel. Thank you.